Welcome everyone. Thank you for tuning in. Some of you watching this are clients. Others might be meeting for the first time. If so, my name is Spencer Miller. I'm a financial advisor with Fiduciary Financial Advisors out of Grand Rapids, Michigan. A couple of housekeeping items here. Feel free to speed this video up. Sometimes it can get drawn out. If you don't want to watch it, feel free to exit now. You're not going to hurt my feelings. And lastly, feel free to share this with anyone that you believe needs to or would benefit from watching this. There's a lot going on in the world. If you turn on any news media source, there's a lot of headlines about inflation, geopolitical, the election, the war in Israel. Markets are kind of scary right now. There's a lot of moving parts. So I wanted to take some time to talk about some strategy to help us navigate these wavering times. The graph that's pulling up on the screen is a crisis and events chart that's put out by First Trust of the S&P index fund over the last 73 years, highlighting all major events. I'll be the first to tell you that there's no good way to predict the future. Markets are going to go up, markets are going to go down. And this can be scary, right? Create fear, create panic, create irrational behavior. But nobody has a crystal ball, and I'm not going to sit here and tell you that I know what the market's going to do or how they're going to react to certain situations. One thing we can do is look at historical data. All economists will agree that over extended periods of time, markets do go up. And if you're feeling this fear currently, that's okay. One of the questions that I do get frequently is the argument that, well, why don't I pull my money, sit it on the sideline waiting for these market corrections? One study put out by First Trust that paints a great picture of this. It shows what missing 10 of the best investing days over a 20-year period will do to a portfolio. The study states that if you invested $10,000 and never put a penny more in on January 2002 and held it to January 22, so through all the ups and downs in the market, that S&P index fund, regardless of what happens, it would average 9.5%, and you would be left with $60,000 of the $10,000 investment. Now, if you panicked and pulled your money at the first sign of trouble, jumped back and forth in and out of the markets, and only missed 10 of the best days over the 20-year period, your returns were cut in half to 5.33%, and you were left with $30,000 of the initial $10,000 invested. Now, we look at a lot of charts, and we'll say to ourselves, man, I wish if I could have just bought it at that dip, that I would have, so much more in returns. But personally, I couldn't predict, the 10 best rebound days over a 20-year period. I'm sure you couldn't either. So that study is only investing $10,000 and never a penny more. If you're working with me, we're probably dollar cost averaging. And I'll save that concept for another video. But basically, in a nutshell, meaning you're going to put more in than 10,000 over a 20-year period. So if we projected those numbers out to be a little more realistic, an investor started with $163,000, same time frame. You'd have well over $1 million come January of 2022, regardless of the ups and downs, just averaging that 9.52% return. But again, if you missed the 10 best trading days over that 20-year period, that portfolio is cut in half, and you'd only end up with $460,000. If you miss 20 of the best days, it gets cut to $266,000. 40 of the best trading days, $122,000. If you miss 60 of the best trading days over that 20-year period, your portfolio originally of $163,000 is a $100,000 loss, and you're left with $63,000. Obviously, everyone's situation is different. We build strategies for all risk tolerances and goal setting for our clients. Strategies are going to look different for somebody in their 20s and 30s, versus somebody who's retired, taking advantage of the highest fixed income rates that we've seen since the 1980s. But I want to jump on here and just show you, this concept just to help ease our minds in these uncertain times. I'll post the source of the information in the comments below. But if you have any questions about your financial situation, or if you want someone to review it, or if you simply want to talk market or strategies, feel free to reach out. Appreciate your time. Thank you so much for watching. Have a wonderful day.